and gentlemen, you have been connected to Creative Newtech Limited's Q3 and 9 months FY24 earnings conference call. The call will begin shortly. Please stay connected. Please note that you have been connected to Creative Newtech Limited's conference call. The call will begin shortly. Please stay connected. Ladies and gentlemen, good day and welcome to the Creative Newtech Limited's Q3 and 9 months FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ketan Patel, Chairman and Managing Director from Creative Newtech Limited. Thank you, and over to you, sir.
Good afternoon, everyone. Welcome to Creative Newtech Limited earnings conference call for the third quarter and 9 months ended December 31st, 2023. I would like to start by thanking you all for taking time to join us today. On the call with me are Mr. Vijit Kanwinde, our CFO, and S. Factors, our investor relations team. To begin with, Creative has continued to grow through the dynamic market changes on the back of its lean business model and selective product portfolio. The quarter ended by has been exceptionally eventful for us. So before we dive into the financial highlights of this quarter, let me quickly outline some notable recent developments that took place during this period. Firstly, we are proud to announce a significant milestone for Creative Newtech as we entered into a partnership that will help shape the future of our company as well as the gaming industry in India. We have signed a joint venture and brand licensing agreement with US-based gaming system giant CyberPower through our subsidiary Creative E-Commerce Ventures Private Limited. We are the exclusive brand licensee for the CyberPower brand in India. This agreement represents more than just a business deal. It signifies a leap forward in our market presence within the India's flourishing gaming industry. With this agreement, we will have access to partnerships through CyberPower with renowned IT companies like NVIDIA, Microsoft, Intel, AMD, to name a few. We'll also be having our own D2C website of CyberPower where consumers can configure themselves gaming PCs and can also buy pre-configured gaming PCs. Just as our previous brand licensing agreement with Honeywell is propelling us forward, this partnership with CyberPower PC promises to elevate our company to new heights and expand our brand licensing business. Under this agreement, we shall manufacture and integrate bespoke high-performance gaming computers, equipment and accessories tailored to the unique preferences of consumers. This would leverage the Make in India initiative as we provide customized gaming systems under the Fiber Power PC brand. The products covered would include gaming PCs, laptops, accessories, and more. This collaboration aligns perfectly with the growing enthusiasm of esports and digital gaming in India and beyond. Speaking of the market opportunity, the potential for growth in the gaming industry is immense, with the Indian market for gaming PCs and equipment expected to reach $1.5 billion by 2027. The esports market, valued at $165.7 million in 2022, is forecasted to grow at a CAGR of 17.2%. With over 444.4 million players in India alone, the demand for high-performance gaming products is undeniable. As we embark on this exciting journey, we anticipate exponential growth opportunities for both the parties. On another note, through our Hong Kong-based subsidiary, Secure Connections Limited, we have tied up with leading distributor of technology products in Indonesia, PT Bintang, MAS, Rezeki, Nusantara. We also tied up with Axion Telecom in Saudi Arabia. This move will help us expand our geographical footprint in Indonesia and GCC region, which is high growth potential area. Through this, we shall bring our entire range of Honeywell licensed products to the Indonesian market and the GCC market, leveraging the local distribution channels. Both the market present immense opportunity for growth given its thriving economy and vibrant consumer base. We also acquired incremental 8% stake in the Honeywell subsidiary, taking our stake to 77.5%. Coming to our distribution portfolio, we signed a strategic agreement with Palred Electronics to distribute their Pitron brands of products across various regions in India. Palred is a domestic company specializing in mobile accessories such as audio products, smart wearables, power banks, etc. Their Pitron brand is quickly gaining popularity, especially among the younger demographics. We shall be offering a diverse range of Pitron audio, smart wearables, and other mobile accessories, meeting the burgeoning demand in the market. Leveraging our extensive offline channels, we are poised to deliver exceptional value and drive growth in this segment. Overall, we are excited about the opportunities ahead and look forward to creating lasting impact through our partnership and strength. Now I hand it over the floor to Mr. Abhijit Karnwende, who will take you through the financial highlights of the quarter and 9 months.
Thank you, Ketan Bhai. Thank you and good afternoon to you all. I will share the highlights of our consolidated financial performance, after which we will open the floor for questions. Our financials are reported as per Ind AS guidelines. Looking at the consolidated Q3 FY24 results, the company reported a total income of rupees 516.31 crores, growing 20.36% year-on-year. This was primarily driven by good demand for EP segment and other brands like Samsung, Cooler Master, Honeywell, ViewSonic. In terms of segmental performance during this quarter, the FMCG segment accounted for 14.09% of the revenue. FMCG accounted for 11.1%, while EB comprised of 74.18% of the revenue. The quarterly EBITDA stood at ₹16.27 crores as against ₹12.69 crores in the previous corresponding period, an increase of 28.23% year-on-year, mainly due to higher revenues. EBITDA margins for this quarter stood at 3.15%, higher by 19 BPS as compared to corresponding quarter last year. Higher contribution from Honeywell helped us to improve the margins. The PAT for the quarter is ₹11.55 crores as compared to ₹7.69 crores in Q3 FY23, and year-on-year growth of 50.16%. EPS for this quarter is rupees 7.29. Looking at the consolidation numbers for 9 months, the company floating income in the 9-month period stood at rupees 1,420.47 crores, growing 42.15% year-on-year. This was driven by healthy demand for products like Samsung, Cooler Master, Honeywell, ViewSonic, and growth in enterprise business segment. The EBITDA for the 9 months FY24 stood at rupees 41.17 crores as against rupees 33.62 crores in the previous corresponding period, an increase of 22.44% year-on-year. EBITDA margins for this period stood at 2.9%. Better operational efficiencies were offset by change in product mix impacting the margins. The PAT for 9 months FY24 was at rupees 27.89 crores as compared to rupees 20.8 crores in 9 months FY23, and year-on-year growth of 34.11%. EPS for 9 months FY24 is rupees 17.71. In January 2024, the company announced the plan to undertake the share swap to increase its stake in the subsidiary Secure Connection Limited. This is all from our side. We can now open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Johar from AJ Capital. Please go ahead.
Yeah, thanks for the opportunity. Great set of numbers, sir. Could you tell me the Honeywell licensing, what is the revenue contribution and what are the products in that? Can you give me the bifurcation of the products?
So Honeywell, totally in the 3 quarters, we have done close to now 130 crores business. This quarter, we did Honeywell close to 55 crores as a business. In Honeywell category, Mr. Aditya, there are 4 categories which we deal in. One is air purifier, second is electronic essentials, third is audio, and fourth is our SCS structured cabling business. Yes? You require any other information more than this?
Yeah. Air purifier, what is the revenue in electronics, audio, cabling, etc.?
If you send me an email, I will send you the details about, because air purifier, this is the season, and I'll send you the details for all the 4 because we have consolidated numbers through the subsidiary. So you can send me an email or post this call, I'll give you the details of the all 4. Yeah.
Okay. And when we say that next year we would do 500 crore business from the Honeywell, so what will be the major contributors among these 4 products would be some percentage terms if you can give?
Okay. Aditya, first is Honeywell may not happen 500 crore next year. It may happen next to next year. That numbers would come. And majorly Honeywell, we are now expanding our territories. So for example, Indonesia got opened last quarter. Saudi Arabia also got opened last quarter. So we signed up with the agreements with the distributors there. And the first material is now on the way to reach Indonesia. It's already there. In Saudi Arabia, it will be reaching now. Egypt also we have now opened up. So in the same categories, because we are expanding the geographies, our business will grow exponentially. That's one. Second, in categories like air purifier, overall the consumers awareness and knowledge about that product has grown to a very high level. And that's why, for example, air purifier as a category is only growing at 24-25% CAGR. So that will also additionally fuel that growth. So that's how we foresee that Honeywell will be a high growth business for another 4 to 5 years for sure.
Yeah, but air purifier will be 50%, electronics will be 30%. I need that percentage. What are you?
Actually, Aditya, if we do our job well, then audio should be the largest category. We just launched close to 59 products, mainly in the audio category. We also had few in the charge and sync category. And one of our AirPods is getting good traction on online basis. So if that category does well, that will be the largest. Otherwise, for us, Honeywell SES and Honeywell air purifier would be the category. Current the trend is that air purifier from the seasonal category may become an all year round category, but that time will only tell. We'll have to see how it goes about.
Okay. So this year we would be clocking somewhere around 160 to 180 in this Honeywell business. So next year it would be, is it safe to assume that 300 plus crores would be from Honeywell?
I think next year, safely we want to assume it could be between 260 to 280, but we plan to go slightly aggressive in terms of our advertising budgets on Honeywell, and if that goes all very well, then yes, we should touch that number.
Okay, great. And whatever the new deals you have signed, right? Like Pal Red, you said, and other deals.
The main superpower from US.
Yeah. So when this contribution will be taking place, like in the revenue thing, that when it will be kicking up nicely, we can see that results.
Ladies and gentlemen, the management line has been disconnected. Kindly stay connected while we try to reconnect them. Thank you. Ladies and gentlemen, thank you for patiently holding. The management's line has been reconnected. Over to you, sir.
Do we have Aditya still on the line?
Yes, sir. Yes.
Sorry, ladies and gentlemen, for the interruption. So, yes, Aditya. The recent announcement are two.
Yeah.
One is Palred. Palred is, they have a brand called Pitron, is a normal distribution agreement. It will help us to go to the mobile channels. The one which we have announced with Cyber Power is more on the lines of Honeywell. But in this case, we are having a JV with that company in our subsidiary, Creative E-Ventures Limited. In this JV, Cyber Power will give us all technical knowledge, also give us access to their relationship with large brands like Microsoft, NVIDIA, and other companies. And also, they will give us the e-commerce knowledge to run the website, D2 website in India. So that's the contract with them. I think we should start seeing some numbers coming from early next year, second quarter, because this business will take some time to build up.
Yeah.
The team has already been hired now, and we have got some good people from leading brands to join us. And they have now started the soft run for the website and other stuff. So I think by March we should up and running with the website, and then how we start getting traffic on the website. Plus, we will also be selling on Amazon and also through Reliance and other parts. So you should see the numbers for this particularly from next second quarter next year.
Yeah, because it's a assembly unit which we have to set up, and it's a quasi manufacturing kind of. Yeah, Aditya.
What is the revenue prediction do we have from this business, sir? What are we targeting internal targets for this business?
Over a period of next 3 years, we think we should be roughly between $40 to $50 million as a whole. Once we start the operations perfectly in 3.5, 4 years, we should. That's what has been their trend when they opened up in Germany and then UK. That has been the case.
So basically, you are saying from the licensing business, we would roughly go around, if I do the calculation, 800 to 1,000 crores revenue will come from the licensing part, right? In the next 3 years.
Yes, considering both, because this is licensing plus JV in the subsidiary. So that's what it should look like in the next 3-4 years' time.
So what is the difference between JV? Is the percentage what comes to us?
With Honeywell, it is that they allow us to use the brand, and they then work with us closely on the specifications and other parts. Here, JV is a real partnership, right? They are partner in that company. So we get to use the brand also, we get to use their technical knowledge also, and then we split the profits. So they have also a stake in the company.
Okay. Fine, sir. Thank you.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1 now. The next question is from the line of Kunal Ochiramani from Kitara Capital. Please go ahead.
Sir, wanted to know what will be the share of exports going ahead as our geographies are going to increase. Any new countries coming soon apart from Indonesia, Saudi Arabia and Egypt? And what is the revenue you are expecting from export markets?
So ideally, Kunal, we have 38 countries where we can go. What we have said is that countries with the highest population and the right per capita income should be our focus countries. So that's how we took Saudi Arabia, Egypt, Dubai from the point of it's a strategic location. When we went to Southeast Asia, we took Singapore from the point of strategic location. And of course, in Southeast Asia, the biggest countries are Indonesia, Thailand, and Malaysia. So currently, Indonesia is open. Thailand also we have signed up, but we have signed up with an Apple reseller there who runs Apple stores. So he will obviously do only mobile accessories. So for the rest of the products, we have to find distributors there. So over a period of time, I think in the next 2-3 years, the business should be close to 75% export and 25% local. That's what we looks like.
Okay. And what would be the revenue share from Petron?
Oh, okay. So Petron is currently mostly an online-only brand, and they do close to a revenue online close to 200 crores a year, and they are aggressively planning now to come to offline through us. So depends upon the company, but we have set up a modest target of 2 crores a month from the next quarter.
And as you're saying, cyber power will be the next big thing. What is the nature of product, if you can explain, and how much revenue could we expect?
Okay. So cyber power is basically high-performance computer components. High-performance computer components get into the gaming industry. They also go into servers. They also go into machines for AutoCAD, for 3D, and now the AI machines. So all of them, they require a good graphic processing unit, as well as they also require faster CPUs and also a good amount of cooling so that the computers don't get heated up and then slow down. That's the case. Currently, the gaming industry, for example, if you see, is 1.5 billion by 2027 it will become. And currently, it is at around $165.7 million, right? And we are growing at a CAGR of 17.2% in this industry. So if you see, there is no D2C website or a website where a consumer who is mainly the millennial, right? The demographics for this is the millennials and the Gen Z. If they want to buy, there is no website where they can immediately, there are websites, but not a very popular one. So we have here the first mover advantage as the first case. Second, cyber power, and with them, they also have another company called iBuyPower. Both of them put together are close to $1 billion company in the U.S., and they have close to 60-odd% of the market share there. So with their expertise, we think that in the next 3 to 4 years, we will become a leading player in the gaming industry in India. And with the AI picking up, people will also buy these high-performance computer components, not for just for gaming, but for AI also.
Sir, how much revenue could we expect in FY25 and 26-27?
Once we start the operations, the next 3 years around, it would be safe to estimate close to between $40 to $50 million.
Oh, fair enough. Thanks. That means 300 crores.
Yes.
Sir, you have any further questions?
No, thank you so much.
Thank you. The next question is from the line of Man Ashar from MA Capital. Please go ahead.
Hello, sir. Congratulations for a good set of numbers.
Thank you so much, Pankaj.
Yeah, so just wanted to understand few things about the cyber power. So will there, this is a manufacturing deal, right? You will have to put an assembly line and so forth.
Correct.
Okay, so will there be any fresh capital required for the same?
Okay, so this business, you don't require a state-of-art factory. Basically, you require a neat and clean manufacturing space where you put up an assembly line, because the main components are GPU, then the CPU, and then the motherboard and the RAM, which are more or less finished components which you assemble together. Second is, this is mainly made to order, so people go on the website, select the products they want. So there's a configurator on the website where they select all the products, and then it gets manufactured and shipped to the consumer. Once you have a decent idea of what the consumer is buying, then you can have pre-built PCs, which then you can sell to Amazon, Flipkart, Reliance, Chroma, and other stuff. So that's the base. The beauty about this business is that since this is an end consumer driven business mainly, there is no much capital requirement because you get the money first with the order and then you kind of assemble the machine. So nothing, we would not require any large capital or for this business for sure.
Okay. So what I understand is that since this is just a pure assembly business, gross margin should be lower than what we are getting in Honeywell, right?
Okay. So this business, mainly the gross margins are lower. They would be in the range of 14 to 17% because you are dealing with the end consumer directly. If it was a B2B business, then the gross margin would still be lower, close to 5 to 7%. But since you are selling directly to consumer to the website, between 14 to 18% should be that.
And EBITDA margins will be?
EBITDA should be higher because the denominator, the capital required is lower.
Got it. And what will be the since this is purely for India, so since India being a price sensitive economy, what will be the average price range of the products that we'll be offering?
I think average price abroad is $1,800. For us, it would be close to $1,200. So around a lakh of rupees, 1 lakh, 1,10,000 rupees. That's what current gaming PCs sell. And as you also know that we already have Cooler Master and PNY in our gaming category and also Colorful in our gaming category. So this whole tie-up will help us in two ways. It will help us to get good distribution brands under our portfolio, and also it will give us insight on the consumer trend, so we'll be able to plan better in that case.
Okay. And right now we are expanding our foot in other economies for Honeywell. Is there any clause in our agreement with Cyberpower too that we can expand our foot in other economies such as Indonesia right now, what we are doing for Honeywell?
Currently out of US, they are in UK and Germany. Okay. The whole of Asia and Middle East is, they don't have anybody. India, we are there currently. It would be too early to comment because the relationship has just begun. In a couple of years, looking at what we do here, then we could look at newer territories. But India is also, we have the first mover advantage. There is no other website which is so popular. There is no other brand also which is there. And with Cyberpower, we get great access to larger IT companies like Microsoft, NVIDIA, Intel, AMD. So I think next 2-3 years we should concentrate on the India subcontinent only.
Okay, good. And what is the percentage share of our ownership in the GV?
Okay, we would be 49%, they would be 51%.
Achha. So I don't think there will be any material impact in the next 3 years in terms of additional bottom line that will be adding through Cyberpower, right? Because what I'm understanding through the basic math is that 5-10%, 15% at max contribution of bottom line will be from Cyberpower.
Yes, that's...
Achha. Okay. And what I was understanding is that the board was stating that you will only onboard the new brand after the Honeywell brand crosses 230 crores of revenue, 220 to 30 crores of revenue per year.
Correct.
So are we on the roll for the same this year?
Yes. So we are already at 130. We should be around 170, 180 this year. So next year, in the second quarter, we should have that traction. So we are on the right path. We don't have a problem in that case.
Okay, good. Also, sir, in the last meeting that there was a suggestion stating that if there's any new deal where we'll be picking up the stake in our subsidiary, please do the same with the debt rather than equity, because any further equity dilution is capping the upside for existing equity shareholders. Because we as an investor, when we take the entry, we look at the prospective market cap, and further dilution of the equity is capping our upside at this point, considering that equity is costly for us right now, and the company being BBB rated, I don't think that the cost of debt should be more than 9-10% per annum at max. So is there any rationale behind more dilution?
No, actually, you are speaking what is on my mind, exactly what you said. So right now, we are not going to dilute anything for a while. And our interest cost is close to 10%.
Okay. And is there any one-time cost that was being told last time in the quarter, stating about any patent registration or so this quarter?
When we launched this 59 products, close to $350,000 odd of certification costs and the die cost and other ID cost we have to take. That we take in the COGS and conclude it. So we are going to launch close to 90 products. Out of that, 59 are already launched. The rest are on the way to launching. So that's one time cost we have taken it into consideration.
And when can we expect that no more further registration costs, this one-time cost will be hitting our P&L?
No, that's not on our case, right? The BIS is from Indian government. Every 2 years you have to kind of renew the BIS. The cost is not as much as applying for a new product. And similarly, as we go to newer territories and we launch new products, certification is a way in which the government protects its economy also, and also sees that the products which are coming to that country are safe. So that is a thing which we will have to look at. But yes, when you have a Honeywell air purifier and then you have launched 7 products, then you will not launch similar amount of products. You will launch 2 or a single product or 3 products in that air purifier space overall, which will continue for the next 3-4 years. So overall, when the pie becomes larger, the certification cost and all that will get amortized and will not have a much larger effect.
Okay, and that 4.5 to 5% NPBT margins that we were guiding for, when can we expect the territory for the same to begin?
I think 25-26 you should start seeing whatever we have said.
Okay, and what I understand from this Petron deal is that it is completely offline channel business, right?
Currently, yes.
Then why is Gujarat and Mumbai excluded from the deal? Because it is one of the major market for enterprise business, or as we say, trading.
They already had somebody which they wanted to do a trial, and that's how they have somebody there with them who want to do these 2 regions there, and for us also, now we have got the whole India, but we will also start phase-wise with at least 6 to 7 states and then take it further, not all at one lot. And the company would also have wanted that they don't have all the eggs in one basket. They wanted at least to have a couple of guys, one smaller guy, one larger guy, looking at the whole country.
Got it. Sir, just a suggestion from my end. The cyber power deal, I don't think will be making a huge lot of addition in our bottom line, and this is margin dilutive business from what I understand. Considering the Honeywell business, which is highly margin business, which is highly accretive business, shouldn't we consider taking on the brands which are in the same line of margins as Honeywell?
Yes, we should. And in the later, what happens is, once you get into the gaming, you have certain amount of volume. then probably you could have your own brand, or you could take up a brand which then you can take to the gaming world, right? That way you amortize your cost, plus your go-to market also becomes very less expensive. So that's the whole plan. In this case, because it's a JV, they would have their own set of people, CEO, everything who will do. We will just sit on the board. That's the case. So our whole focus will be Honeywell for a while.
Okay. And I don't think this JV deal is adding a lot of value.
Sorry to interrupt, Mr. Rashid. I would request you to rejoin the queue for follow-up questions.
Yeah. Sure. Thank you.
Thank you so much, sir. The next question is from the line of Harsh Shah from Dimensional Securities. Please go ahead.
Good afternoon, sir, and congratulations on great numbers. So most of the questions have been answered. Just one thing on the enterprise business, because over the last 2-3 quarters we were discussing that because this is a low margin business, you might not want to increase this pie of the business, whereas I have contradictory view that if it's adding to your ROC and your cash and your profit, you should continue to do this business. And for that matter, I would even contradict the previous participant's opinion of entering this cyber PC business, because as long as it is giving you access to new brands, technology, if it's adding more money to your bank account and more ROC, because I would look at ROC and not margin, that is what as a shareholder I would do. So just wanted to get a sense on that strategy. So will you continue to grow this enterprise business from this base, and what is the outlook there?
Harsh, thank you for asking this question. Actually, yes, as long as we grow at 50% year on year, we will only be internally, we think only these two matrices make sense for us. How much incremental net profit we add every year, and how much working capital cycle we improve every year. And ROC would be the subset of the PAT only. So that's the two matrices which we are going to work for the next at least 5 years until we can grow at 30-40%. Once we start growing at 10, 15 or 12%, that's when we would then see whether which products do. Otherwise, ROCE is the best matrice we should focus on, and I completely resonate with your views.
Great. Good to know that. Thank you so much, sir.
Thank you so much.
Thank you. The next question is from the line of Pratik Chaudhary from Samarthya Capital. Please go ahead.
So could you tell the air purifier sales for this quarter out of the 55 crores that you saw for the Honeywell business?
I'll give you that number exactly, because why I don't have that is a lot of time in the same month we bill it, but because it's all online sales, they have an 8 or 9 months days lag of delivery date. For their warehouses, in this particular case, they give a delivery date. So our CFO says that any delivery spending more than 4 days, he takes a sales return. So that's why. Pratik, I probably have your card. I think we have met before. Otherwise, you write an email and I will send you the details, or post this call. If I have your details, I will send you the.
Yeah, and just to what the CFO said, that sales beyond how many months are considered as returns?
4 days. 4 days. If I bill on 1st and I don't deliver till 4th, or the customer doesn't take the delivery by 4th, he'll take a sales return. Not months. I'm saying days.
But you're saying that the sales cycle is 8 to 9 months, is what you're saying?
No, 8 to 9 days. So, for example, if Amazon places an order, say on 30th of January, they will give me only the warehouse date of delivery, say 9th, 10th, 12th. That's how they will give me. That's the case. So, if I would have billed them something on the month end and I would not have delivered in 4 or 5 days, then Abhijit would have done a sales return. So I'll just check and give you the exact number.
So only on account of that, I'll connect with you separately.
So I don't have that exact number, and I would give you that exact number.
Right.
And this, you were talking about $350,000 as the cost of certifications, which were incurred.
The 38 geographies.
Okay. So this cost was expensed through the P&L?
Yes, it's expense in the. So we take it in the COGS of the goods.
9 months. Certification is a different line item, and all the mold and other things, we have been expensed out in the COGS in 9 months.
Achha, it's not in the quarter only, it's spread out in the 9 months of this year.
So 59 products were launched this quarter. So,
but working starts much earlier, so it would be 6 months kind of a thing. This quarter would have a higher share.
Okay.
Yeah.
Got it. And this, the JV that we spoke about, you were telling about gross margins to be 14 to 17%.
Yes, 14 to 18.
14 to 18.
14
See,
to 18.
there I would like to add something. Today we are estimating. It's a beginning, so we are estimating modest quantities. Okay,
right.
So we would be buying the material from the distributor, and right now our JV partners are so big that they have association directly with Intel, NVIDIA, and other Microsoft directly. So they have their special rates. Today, the benefit of those special rates would not be available to us since we are just beginning. All right. Going forward, when our numbers go up, okay, those special rates would be available to us, and therefore our gross margin would go from 17 to maybe 30, 25, 30. Okay, and that is the beauty, and that's why manufacturing is important to us. So today's 17% is not what we are targeting. Is my humble submission.
Okay, sir. And for your EV business, we did a fantastic turnover this time, but our margins, came about less than EBIT margins were less than 2%.
Yes.
Why was there any specific reason for that?
So there were, because actually you look quarter and quarter on the figures, that's the case. Because we work with all these brands, sometimes they are also under pressure because of the high season sales of this. So this also would get rationalized in the coming quarter for sure with the brand.
Okay. And roughly what margins do you expect in this segment? Average margins?
Normally, if you see, the average margin has been in the range of 2.5 to 2.5. All right. And this time, the last quarter was a little higher. Okay. And this quarter was 1.77. Okay.
Correct.
So actually, it will rationalize to 2.5. This is, if you see many quarters, okay, we have never fallen below 2. This is the first time, the scale has, it is a double whammy. Almost 3 crores less in gross margin as compared to last quarter in EB. The double whammy is that the sale has increased by 80 crores, okay, but the margin overall has fallen. So we have taken, this quarter we have been lower, but I am 100% sure that, we will come to more than 2.5% in the coming quarter and more, so that we will be able to recoup also this loss, kind of.
And what
this is the first quarter I would say that, we have gone so low times.
Right. And what sort of quarterly revenues could you do in the EB segment?
So currently our whole EB works only about how much capital we have free, and it works on back-to-back basis only. We get advance, we pay advance. That's the whole stuff on that. So if we get the opportunity this quarter also, because we had the funded, we have the capital, and we will do similar numbers in that.
Okay, sir. Thank you. I'll get back to you.
Thank you.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity, sir. I just wanted to know when it comes to the Honeywell business, at what levels are we expecting to close this year, and what are our projections for FY25? And could you also tell me what is the growth guidance or the internal estimate that the management has for the total revenue?
Okay. So 3 questions you asked. First was Honeywell, what do you think we will do this year? We will close the Honeywell between 170 and 180 crores. You said what would happen the next year? Roughly around between 260 to 280 crores should happen the next year. And overall numbers this year, I think we should close at around 1,600 crores.
More than that, 1650.
Around 1650 crores overall we will close.
You're talking about 1,600 in FY24.
No,
this is FY24 we are referring to. More than 1,600 crores.
Okay.
Okay.
And future growth?
Future.
So usually we would like to grow at the same space at what we are growing for the next 3 to 4 years.
Correct.
Because that's much opportunity is there, Mr. Iyer.
Okay. Right. Yeah, I'll get back in Tuesday.
Thank you so much.
Thank you. The next question is from the line of Man Ashar from MA Capital. Please go ahead.
Hello, sir. Just wanted to know whether we are cash flow positive for this quarter, since there was some lumpiness in the cash flows previous quarter.
We are very marginally cash flow positive month, but I'm very sure that by year end we will have a phenomenal cash flow positive, operational cash flow positive.
Okay. And last question from my end is that is there any significant pattern in the revenue recognition number of ours? I mean, in which quarter is the highest sales, just to understand the business more clearly?
Usually the second and third quarter when the festive season is there, that's when the higher sale number is there. Plus, because now we are going to different geographies, so Middle East will have a different side. Indonesia also, for example, if air purifier seasonal, Indonesia has their season during June, July, whereas Delhi has in October, November, December. So I think over a period of time, once we go to more than 15, 16 countries, then this seasonality will go down and we would have good average numbers all the quarters.
Okay. That's it from my end. Thank you and all the best.
Thank you so much, man.
Thank you.
The next question is from the line of Vinay Nadkarni from Hathway Investments Private Limited. Please go ahead.
Yeah, just wanted to check out, you said your FY24 would be around 1650.
Excuse me, sir, I'm sorry to interrupt. Your voice is breaking, sir.
Okay, can you hear me?
Yes.
Yeah, I'm saying your FY24 you said is around 1650. But your 9 months figure is approximately 1390 till now. So are we looking at a degrowth in the next quarter? Because last year, fourth quarter was around 300 plus, right?
Yes. No, we are not looking at degrowth. Only I'm trying to be cautious. So next call I can come happily on the next call. That's what I'm trying to do. Mr. Nadkarni.
Expecting any degrowth, my friend.
Yes. No.
It will be same run rate or little better.
Yes.
Yeah. Then it could have crossed around 1700-1800 at least. But fine. The last question was also your margins operating margins being very wafer thin. When do you see that margin going up to at least some higher single-digit numbers?
Yes. So, sir, right now, no, because we are in the high growth zone, as a company, we have taken a call that we'll focus on the ROCE as long as we can improve our working capital cycle, and as long as every year we can grow our PAT by at least 40-50% in absolute value, we would do that. And then once we, say in 3, 4, 5 year cycle, once we start slowing down a bit, that's when we will try to go to a higher margin. That's the one part of the business. Second is, as Honeywell business starts growing also, we should start moving towards 4 to 5% PAT. I think that number on the overall turnover, I am saying. I think that's consolidated.
And that would happen in next 2.5 years.
Yes. So FY25, 26.
26 is the time.
Surely we should be there.
Good PAT numbers. Percentage.
Okay. Thanks a lot. That's all from me. Thank you very much.
Thank you, Mr. Vinay.
Thank you. Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Ketan Patel, Chairman and Managing Director from Creative Newtech Limited, for closing comments. Over to you, sir.
Thank you everyone once again for your participation in our Quarter 3 and 9-month FY24 earning calls. In case of any further queries, you may get in touch with Adfactors PR or feel free to get in touch with us. We look forward to interacting with you next quarter. Thank you.
Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Creative Newtech Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.